What if the next stock market crash doesn't tank the dollar, it supercharges it? Welcome back to the channel. Today we are looking at how a potential stock market crash in 2026 could rip through the forex majors and why USD safe haven flows might be the single biggest opportunity sitting on your Exness terminal right now. Let's break it down. Whenever the S&P 500 enters a deep risk-off move, capital does not just vanish, it rotates. And historically, a huge chunk of that capital rotates straight into US dollars, US treasuries, and short-dated cash equivalents. That is the safe haven bid. So if equities crack in 2026, the first thing to watch is the dollar index, the DXY. A sharp move above its recent range tells you the haven trade is alive, and that has direct consequences for every major pair you trade. Start with EUR USD. The euro is structurally a risk-sensitive currency because Europe runs a current account surplus and its banks have heavy global exposure. When Wall Street panics, EUR USD usually drops, and the move can extend much further than fundamentals suggest. On Exness, that means watching for clean breaks of key support, while being aware that spreads on majors can widen briefly during US session volatility spikes. Next, GBP USD. Cable behaves like a higher beta euro. It tends to fall harder during global risk-off, especially if UK data is soft. AUD USD and NZD USD are even more extreme. They are commodity and China-linked, so an equity crash plus a China growth scare can send them into a free fall, and they often lead the move before the rest of the majors catch up. Now the wild card, USD JPY. The yen is the other classic safe haven, which means USD JPY can actually drop during a crash, even while the dollar strengthens everywhere else. This is where a lot of traders blow up. They assume dollar strong equals USD JPY up. In a real risk-off shock, it is often the opposite. If you trade this pair on Exness, plan for two scenarios, not one. So how do you prepare? First, respect position sizing. Volatility expansion during a crash means your normal stop distances may not be enough. Second, watch correlations. When equities crash, Euro USD, GBP USD, and AUD USD often move together. So stacking shorts is really one big trade, not three. Third, keep an eye on funding, swaps, and margin requirements because brokers including Exness can adjust margin during extreme volatility. Trade the scenario, not the headline. If you found this useful, drop a comment with the pair you are watching most into 2026, and I will cover it in the next video.